Hello, I'm Christine Aliff and I look after the client services team at Charles Cameron Associates. Welcome to the fourth in our series of frequently asked questions from first-time buyers, and today we're going to be looking at questions around the mortgage process. How long is a mortgage agreement in principle normally valid for?
This varies on the lender. So they can be 30 days, 60 days or 90 days. It varies between lenders.
How far ahead of the process can we reach out to an advisor?
As soon as possible, really. At Charles Cameron, we like to meet people at the embryonic stage before they've even started viewing properties. That way you can get all the information you need, so when you go out and view properties, you're fully equipped. You'll know exactly how much you can borrow, you'll know exactly how much it will cost, you'll be armed with an agreement in principle. We'll put you in a very good position to make really strong offers when you're viewing property. So I would say reach out as soon as possible to one of our advisors.
At what point in the mortgage process should I start to look for a property?
Well, you need to find a property first, ideally, before we can do anything on the mortgage, because again, the mortgage is a secured loan. The lender are going to want to value that property to make sure it's worth what you're asking to borrow. So really, you need to find a property first before we can start the mortgage process, except for the fact we can do that initial agreement in principle for you, but that really is before you found a property. So as soon as you've got an agreement in principle, you should find a property and then we apply for the mortgage afterwards.
How many months' bank statements do you usually need for a mortgage application? Also, if I use my overdraft under £100, how much of an effect would that have?
If you're an employed person, we typically need 3 months bank statements. If you're self-employed, at the moment, under COVID policies with lenders, it may be 3 or even 6 months. If you are in your overdraft, that's fine, so long as it's within an agreed limit. Anything up to £100 would be fine, I'm sure. So it shouldn't really have an impact unless you are seriously breaching your agreed overdraft limit on a monthly basis.
On average, how long does the home purchase process take?
Generally, it takes 3 months to buy a house. It's fairly standard. Everyone will quote you the same thing, 10 to 12 weeks. But generally speaking, once you find a property and you've had an offer accepted, you need to do 2 things. You need to apply for your mortgage and instruct your solicitor. If you don't do either one, the whole process will grind to a halt in 2 or 3 weeks. Usually after you've had your offer accepted, you'll be in a position to exchange contracts in around 6 to 8 weeks' time, and usually completion, i.e. the day you move in, is around 4 weeks after that. So that's where that timeline comes from, 10 to 12 weeks.
If you sell your house before the mortgage is paid off and your home has gone up in value, do you or the bank get the extra money?
I'm glad to say that once a property goes up in value, you keep all the capital appreciation, unless you're on something like the government Help to Buy scheme, of course, which is a shared equity arrangement, and in which case the British government will share that capital growth with you. The good news, of course, when you come to sell your main residence in the United Kingdom, it's free of any capital gains tax.
Are there any extra costs involved in selling your home before your mortgage is paid off?
You would have the normal fees that you would incur when you sell a property, so maybe the estate agent, maybe solicitors. But apart from that, with the mortgage, you would only pay redemption penalties if you were involved in a fixed rate period, for example. But you'll be well aware of that. Those terms and conditions are clearly laid out in your mortgage offer.
I live in the UK, but I'm not a national. Does this have an impact on my ability to get a mortgage here?
Yes, it does. It does have some impact. However, there are plenty of high street lenders that will happily give you a mortgage. Usual loan to values apply, 85 or 90%. Some lenders, however, will limit the loan to value to a maximum of 75% if you're a foreign national and you don't have indefinite leave to remain in the UK.
Is it possible to buy a property at auction and use a mortgage to pay for it?
Yes, you can, is the simple answer, but I'm afraid it's not a simple process buying a property at auction. It is incredibly complex. And if you are reliant upon a mortgage, I really can't stress you must speak with one of our advisors. You must seek detailed advice if you're looking to buy a property at auction and you are going to require mortgage money to complete that purchase.
Do new build properties go through the same process, or are the fees any different? Are there any other considerations to take into account for new build properties?
Generally speaking, The only consideration is that some lenders will limit their maximum loan to value for new build flats to 75%. But again, at the moment, 85% and even potentially 90% are available on new build properties. But again, you really need to speak with an advisor before you embark on any journey, particularly on new builds, because there are different considerations from a mortgage perspective.
Is there a maximum household income for Help to Buy eligibility like there is for shared ownership?
At the moment, no, there isn't a maximum income for Help to Buy. Help to Buy is changing next year, and there has been some talk about an element of means tested, like a maximum household income, but at the moment it would appear that's not the case.
Thank you for taking the time to watch this video. We do hope that you found it useful. Please do keep checking our Knowledge Hub for lots more interesting videos and articles on the mortgage market.